high point of trade, and now the Nifty is around that 7850 level. The stock on our radar right now is Syngene, the newly listed contract research arm of Biocon. Let's just pull up the Syngene chart for you. The issue price of this IPO was about 250 rupees, and since then the stock has risen almost 31% from the issue price and has been one of the better performing pharma stocks since its listing. Let's invite Peter Bains, the CEO of Syngene International, to give us some indications of what the future will look like for Syngene. Mr. Bains, good morning and thank you for joining us on the show. It's been a very good fiscal for you in FY15, that is, where you've seen a healthy sales growth of almost 25% and profits as well have been substantially higher. What kind of annual growth can we expect from Syngene for the next couple of years, and what could the positive triggers be? Is my voice reaching you? Mr. Bains, is my voice reaching you?
No,
okay.
I think he's just lost us halfway through the question. We should get back to Syngene in a bit. One of those dramatically performing stocks listed at issue price was 250, and now look at that stock, 330. Where is it now? Okay, 332. So it's a good 32% jump from its listing. And that was what, about 3 months back. In a quarter, that stock has given very good gains, you will have to say.
And had great subscription as well. After VRL Logistics, I think Syngene was one of the
I expected that gap up opening, but it's actually built on that. You know, even after the positive listing, it's gone on to build strength. Okay. I think Mr. Bains is connected.
Yes, Mr. Bains, if my voice is reaching you, I just wanted to welcome you to our show and ask you about what the growth potential looks like for Syngene, because FY15 was a very strong year with a 20% revenue growth and better profit growth as well. What could the annual growth for Syngene look like, and what are the positive triggers?
Very good. Well, thank you very much. If we look forward for Syngene, I think the guidance that we're giving is that we see a target of $250 million in fiscal 2018. That translates to a compound average growth rate at the revenue level of just above 20%. And we remain committed and confident on those numbers going forward.
Okay. Mr. Bains, you are now a clinical research organization, and if I'm not mistaken, you all had indicated that you all want to become a clinical research and manufacturing organization somewhere down the line. What's the timetable for that?
So yes, indeed, that's very much the case, and indeed today we are a manufacturing organization also, though the manufacturing that we undertake is pre-commercial. We're supplying a number of companies with their clinical trial material, and we're working with them on manufacturing and process development of even earlier stage compounds. But we have a very strong pipeline now where we're supplying late-stage clinical product, and we see the opportunity to transfer that into the commercial arena. So going forward, we have very exciting growth plans around building a commercial manufacturing facility to complement our pre-commercial manufacturing that we undertake today.
Yeah, but what's the timetable for that? Do we see that happen in the next financial year?
Yes, I mean, the existing capacity that we have in our Bangalore facility will see us have the capability to supply our customers in the early stage commercial supply, and we've earmarked about $100 million of investment capital to build a new multi-purpose, multi-customer commercial manufacturing facility in Mangalore, in the SEZ facility in Mangalore. We'll build that over the next few years. We see that coming on stream in fiscal 2018.
Okay. So put together with these new facilities, what kind of operational leverage do you expect to see? What would your own expectations be for your margins in the next 1 year?
So I think on margins, we've seen in the last 5 years that we've been able to sustain margins in a very narrow band at a very high quality level. So in the last 5 years, from 2011 to 2015, our EBIT margins have been maintained between 31 and 34%, averaging 32. And going forward, we see that we should be able to sustain that margin level.
Okay. Does manufacturing mean higher margins?
So the manufacturing that we undertake will be exclusively on new chemical entities. It's an important and a very clear distinction. These are novel chemical entities for global companies, and we see the margins that we'll be able to drive from both pre-commercial and commercial supplies maintaining in this range, in this sort of 31 to 34% range that we've been able to deliver in the last 5 years.
Okay. Now, this is a completely innocent question. There are, drug companies which often tell us that some of these companies suddenly get out-licensed, and there are huge milestone monies that keep coming into the drug companies. Are you all in that space? Should we expect the word milestone to figure or out-licensing to figure sooner or later?
No, I mean, our model is really that we're teams of scientists working in world-class labs and manufacturing facilities, but we're really putting the science of our clients to work. They'll develop their assets with our support, and they may license them out. So we don't develop our own products for licensing out. We support our clients in advancing
and there's no plan to do that
to the market.
There's no plan to do original research.
There are no plans for us to develop our own assets. We are a contract service provider. And we're a full service provider. All our revenues are derived from the support that we provide to our client and customer base.
Okay. Can you just give us how the currency has impacted your business? How has the dollar strength impacted realizations for you?
Well, I think that the dollar realization has supported our revenues, and we've seen some currency gains there. We look to ensure that we hedge that well, so we have a comprehensive hedging policy so that we protect the downside and can share in an upside. So we're well covered in that respect.
Okay. You were telling us about this Mangalore facility where you've invested about $100 million. What is the capacity of that facility, and what will your total capacity stand at now?
So we have not yet invested the $100 million. This is earmarked for investment over the next 3 to 4 years. We've acquired the land in Mangalore. We're spending some time now going through the regulatory processes, getting the permits and the licenses. And I think we'll start the real build next year. And the way we'll approach this is to phase the spending. About half the money will be spent on building the shell of the facility, and then the second half will be built when we have much clearer visibility of business coming in. And we'll build it on a modular basis, and this will be multi-product and multi-client, so capacities can be expanded very, very rapidly as we would need to.
Okay. Well, finally, Mr. Bains, will it always be organic growth that you will concentrate on, putting in your own factories and commercializing production for your clients? Or will you even think of buying other clinical research organizations or clinical research and manufacturing organizations?
Right. So I think that going forward, I think the majority of our growth and expansion will be organic, but we have always kept an eye open and will keep an eye open for opportunities for inorganic acquisition of capabilities that will complement the core capabilities that we're building on our very extensive integrated platform here in Bangalore. So I think it will be largely organic, but there can always be the opportunity for some inorganic acquisition as well.
Fair point. Thank you very much, Peter Bains, for joining us with all those details. So that's the word coming from Syngene. Since its listing a quarter ago, has gained about 32%. And of course, strong growth expected. That's the word coming from the